Folks, there's been a massive flash crash in the markets. There's just no doubt about it. And many traders lost a lot of cash fast. And they're hurting, and I could sympathize with them. You see, I lost a significant amount of capital during the flash crash of 2005. It completely changed my perspective on the stock market and other global markets. In fact, it taught me a number of different things about my portfolio and trading in general. Like, even when I'm trading the best stocks, I still need to hedge my positions. It's just the way it is. It's a principle that I still practice to this day. And that's why I want to show you an example of how this is so important and why it's so important. Today, I'm going to break down how to not only protect my portfolio, but make money during and after a massive flash crash. Folks, I got something really important today to talk to you about, something really, really important. Now, I've been talking about this for years, but we've been in a raging strong stock market. So everybody's been saying, hedge? We don't need a hedge. What do you need a hedge for? All these hedge talks, the market's strong, it'll never break down. It's always really a robust market. Trump's at the wheel. Well, all of this is true, but sometimes you have unforeseeability, earthquakes, typhoons, volcanoes erupting, coronaviruses. It's just part of life. It's not political. Trump had nothing to do with it. It's just the way it is. It's just the way it is. We still don't know if it was caused by Chinese people eating bats or if it was some kind of a virus that was created in a lab. We still don't know the details. And we still don't know the impact it'll have on the economy. Therefore, I wanted to talk about certain ways to hedge your portfolio. Now, a lot of traders are now thinking, wait, I got to hear about this. This is really important, and it is. And you should always have a hedge. What do I always tell you guys? The difference between a professional trader and a retail trader is professional traders always have a hedge. They're always preparing for the worst. Hoping for the best, preparing for the worst. So let's talk about different hedges, and I'll outline the best hedges that you could use depending on the portfolio you have. Now, you may be asking yourself or asking me, well, what do I really need a hedge for? I'm just a buy and hold investor, or you're afraid to take the position off because of tax implications. Let's say you inherited a stock portfolio and now you have to sell. Well, that's what a hedge is great for. You could leave your position on, put the hedge on, and then take the hedge off. And it's like a parachute. Everything you lose from your portfolio, you'll gain on the hedge. So there are some specific and broad hedges. What is a specific hedge? A specific hedge is the kind of hedge that you would use if you have a specific type of a portfolio. For example, let's say you're holding a S&P broad-based portfolio where you have chip stocks, where you have healthcare stocks, where you have utility stocks, a broad portfolio of several different stocks. It would make sense to get a hedge using a ETF. An ETF is an exchange-traded fund, and it allows you to trade a basket of stocks in one shot. So what we're looking at right now, this is ticker symbol SDS, and it's a leveraged S&P 500 hedge. So for every share of an S&P 500 stock, every 2 shares of an S&P 500 stocks, you would get 1 share of this. It's leverage. So it's like getting margin, but without having margin. And it's a perfect 100% inverse trading action that you would see from the S&P 500. Ticker symbol SDS. This is a very good broad market hedge. Let's say you have concentration in tech stocks and growth stocks. I get it. I totally understand. Let's say you have a big position in Intel, Microsoft, NVIDIA, Amazon, so forth and so forth. Well, and by the way, those stocks are actually holding up better than in all, which is kind of odd because this whole coronavirus started in Asia, but that's for another day. This is an ultra short. Again, it's double leveraged. You get twice as much exposure for the risk, and it'll hedge your NASDAQ 100 stocks. Ticker symbol SQQQ. If you have a growth stock or a tech stock concentrated portfolio, this would give you a very strong exposure, especially if they're large caps. And folks, there's a index like this for the Russell 2002 and for the mid caps. All of them have ETFs. All you have to do is go to Google and type in hedge for Russell 2000 or hedge for S&P mid cap 400. and you'll get the ticker symbol. I don't want to go through 100 ticker symbols. I want to just cover the most important ones. So again, if you have a growth stock portfolio or your exposure is in growth and tech stocks, Ultra Pro SQQQ. Now, let's say you have Dow stocks, real blue chippy stocks, your Caterpillar, your Gillette, the blue chip stock portfolio. This would happen, let's say your grandfather passed away and left you a bunch of stocks that he acquired 50 years ago, 60 years ago. A lot of traders, I've been getting a lot of email from traders and investors who have this, and they're like, Roger, I can't liquidate this. It's worth hundreds of thousands of dollars. I would get capital gains. I get it. I understand. DXD. It's ultra short. It's double leveraged Dow. Now, why am I giving you double leveraged? There's triple leveraged. There's quad leveraged. There's no leveraged. But usually when you have a hedge, it's better to use a leveraged ETF than margin, because then you don't have to pay the margin interest. And you don't know how long you'll be holding the hedge for. If it's for 2 days, it doesn't make any difference. But if it's for a few months and your portfolio is rather large, that interest can eat up, even though money's very cheap right now. But again, why pay the Fed fund rate if you don't have to? So again, now let's talk about unnatural hedges. Now, what is an unnatural hedge? An unnatural hedge is something you would include in your portfolio that wouldn't give you an exact one-to-one hedge, but it would give you an overall protection from the stock market. It would give you a level of diversification. Gold is very good for that. Ticker symbol GLD, you don't need short, you don't need long, you just need a regular gold contract. You don't have to go to a futures broker. You could do this with a regular stockbroker. It's an exchange-traded ETF, just like the ones we just saw for the SPY, for the QQQ, for the Dow Jones, but this focuses on gold. Another good one that I don't know why I didn't put up is VXX. Now, VXX, again, this is not a direct hedge. These are indirect hedges. But this is a really good hedge. As you could see, stock market's been going down, but volatility has been rising. All right. Now, again, how much of this do you put? How much do you buy? How much do you sell? It's not an exact science. You'll have to kind of see what your exposure's worth, what your portfolio's worth, your daily volatility. If you have detailed questions, talk to a professional, a financial advisor, somebody who can calculate risk. I've got videos that I've done in the past that show you how to use ATR to measure your risk in order to calculate the level of exposure. But again, all of these tools, VXX, GLD, DXD, SQQQ, SDS, these are all of some of the best hedges possible. Now, I'm saving the best one for last. There's a hedge, in my opinion, that's 3 times better than any of the ones I've showed you. But I'm not going to give it away here. I'm going to give it during the class we have, this training session. This is my Gladiator hedge, and you don't want to miss it. So I'm saving it for this Thursday's event. It's going to be hot, and I'm going to show you some examples of how we were able to make out like bandits during the current coronavirus flash crash. I'm going to teach you how to turn a flash crash into fast cash. Don't miss out. Folks, over the last few weeks, I've been using a secret weapon that kept me safe during this crazy, crazy market. And on Thursday at 1 p.m. Eastern Time, I'm going live to show you the exact method I've been using and why flash crashes offer enormous profit opportunities. As a bonus, I'm even throwing in my #1 fast cash stock. That's something you do not want to miss. Be sure to click the button below, RSVP to my live event. Do it now. You won't regret it.